What's going on? What's going on, everybody? Welcome to this Friday Live by the Hood. For those tuning in for the first time, this is our Friday show. We go live with folks in our community, answer questions, just have conversations about what's going on in the world of investing, talk about the market, real estate, whatever it is that we got to talk about. We have those conversations. Just something that we do every Friday. For those who, like I said, maybe watching again for the first time. And if you are watching for the first time, make sure you hit the like button. Make sure you share this video. Make sure you give us some feedback. Let us know what's going on. This is a special episode. I'm gonna tell you why, right? So I got my brother Corey in the building as always, right? But we got a very special guest, and I got to introduce this brother. This is Antonio Eubanks, man, who's a powerhouse. This guy has been an investor and a trader for multiple decades, and he always shares his wisdom with us. He's been on our podcast to tell his story, so make sure you check out the episode of our podcast where he tells his personal story. But even since then, I've learned from the brother. The brother always shares gems. So I said, let's bring him on Friday so the people can ask him questions, and also just he can share his knowledge, man, because the brother is a wealth of knowledge, man. But, first off, Corey, how are you, good brother?
Man, I'm, every day above the ground is a good day. I do the same things that I always do. I take care of my family. I get this money and I talk shit. So
yeah, that's an amazing life. That's an amazing life. But Antonio, man, like I was telling the people, man, you're amazing brother, man, for sharing all the information that you share, man. First of all, I just want to say thank you for joining us on this Friday, man.
Oh man, ain't no problem, man. You hit me up kind of late, but I said I'll go ahead and do it for my people.
You know what? Because me and Corey were talking earlier, and we were talking about like different topics, and we were talking about like news affecting the market. And I'm like, I know Antonio has a thought on this because like he's always sharing game, man. Like I saw something that you had put into the group a couple of days ago, and I like, you wrote this long thing out about the news in the market. And I was like, I know Antonio got something to say about this. So let's reach out to him just to see if he can come on. You know what I mean? Before we move any further, let's just check in with some of the folks watching, man. Brandon, what's up, Brandon? Let's talk about the memes. Man, you already know, man. Listen, I'm just out here, competing in the meme game, man. That's all, the meme goat is what they call me. Jose, what's up, brother? How you? Adrian checking in. Adrian, how you doing?
Yo, what's going on?
We got our brother Don. Don, how are you, good brother? How you making out?
Always with it.
That's right. And for everybody watching, man, please hit the like button. I don't care if you're watching on YouTube or you're watching on Facebook. Just hit that like button because it helps us fight the algos. But Corey, how was your week overall? How was your week investing? Did you make any big moves this week? Were you like laying low? What was going on?
So what I did this week is I bought 200 shares of SQQQ, which is a 3 times inverse. It's a 3 times inverse ETF. So basically what it does is it tracks the NASDAQ, but it tracks it in the bear. It tracks the bear aspects of the NASDAQ. So if the NASDAQ go down, basically I get paid out. And because I have a tech heavy center to my long-term game, I bought some of those as a hedge against that. So I make money whether it go one way or the other, and then I ran covered calls on 100 of those. So
yeah, I was gonna say I haven't run my general cover calls that I was running all summer. I haven't run them in a couple weeks. For one, I was making a big transition, moving money into my TD account, but DraftKings has been moving so crazy that I just like been sitting around watching it. It's like I was just sitting there watching it as opposed to like doing my general cover call on it. So I was really low this week. I mean, I got my biggest dividend check that I get every year, which is Coca-Cola. That hit the day, so that was love. Shout out to the good folks at Coca-Cola.
I got that too. I put that in the group. I caught a little couple dollars off of that. I also so I spent a lot of money on QQQ this week because I also ran some cash secure puts on them. So which is I sold some. So I bought 200 of them, ran cover calls, ran some cash secure puts on them, and then
you did it at the same time.
Yes.
Okay.
Right. Okay.
Then, that's kind of the strategy. That's a strategy that Jake Johnson was talking about. I've never tried that, but I know that we had a conversation with him, and he talked about doing that.
I ran them at the same time, but I didn't run them at the same price. So that's we was talking about running them at the same price, but I didn't run them at the same price. And I also did I've been running Pinterest calls for the last month and a half. I've been running Pinterest 50s and plug 14s for January, and both of them joints was they took off like a rocket this week.
What the hell did you see? I don't even like. What made you look at Pinterest like that? There's certain companies I don't even look at. Like, what made you look at Pinterest?
Well, three things drew me to Pinterest. Number one, their volume. As a company, I know what Pinterest does, right? I know how they make their money. They're an ad company. They're like a baby Facebook, right?
Yeah,
But
exactly.
they're basically like a cork board. Like, so
I know what I've been on the site. I know what the site is.
So,
I'm just saying, like, what made you look at them in the trade?
So one, their volume. Two, they have small spreads, so I don't lose money going in and out of there. And three, I've been seeing nothing but good news about them. I was tracking them for about 3 months before I started trading them, and I saw nothing but good news about them. And so every place that I looked, I couldn't find. I was looking for bad news, and I couldn't find none. So it made me start to trade them. And so about a month ago, I started trading Pinterest, and it's been popping for me. You know what I mean? Like it took a dip when the rest of the market took a dip, but it didn't. It went from like 38 to 34, and now it ran this week from about 36 up to 43. So and I had Pinterest 50s, and so I sold out of those Pinterest 50s today for a nice little profit. And then with the plug 14s, I'm still holding on to those because I think plug still got some room to run. So January 14th, January 21s I got for those.
Yeah, so I mean, I haven't really, like, in terms of the trades, I've really been kind of quiet this past week. I bought an MGK. I got a limit. I bought it on a limit. And got in and made money right away, which is dope. Other than that, man, bought some metal. And shout out to everybody who supported that last video on our YouTube about the metal, because that did very well. And it's another one dropping this Monday about precious metals. But Antonio, man, any interesting things for you this week in terms of the market, in terms of trading?
Man, to tell you the truth, I've been kind of quiet on the market, man. I actually didn't trade too much. I ran a couple of on the EV side of electric vehicles. I was fooling around with some Blink and some Workhorse for some trades, but actually, to be honest, man, I've been kind of quiet in the market and building some cash because I'm expecting a quick little dip down. Especially now with the news that's going on. So, building some cash, and then actually, I have been positioning in some long-term stuff though. I'm always trying to go shopping for some long-term stuff. And with Corey talking about Pinterest, man, yeah, Pinterest is not only a good trade, but it's a good long-term too. I hold Pinterest in a little M1 finance account that I have, and I call it my anti-FANG portfolio. Because FANG is the Facebook, Apple, Amazon, Netflix, and Google. Yeah. Well, I got stocks that mimic those, but say for instance, like Facebook is replaced with Pinterest. Apple I got replaced with Skyworks because that's that 5G play. Netflix I replaced with Roku. Google I replaced with Trade Desk. And Amazon, since it's a beast, I had to kind of break that up a little bit. So I got that going with some Shopify, some Etsy, and ServiceNow.
Do they run like the same as FANG? Are you saying like they run similar to FANG? You call it anti-FANG, but it sounds to me like they run similar to FANG. So you know.
Yeah, I call it anti-FANG just because I was going against FANG as far as because FANG is a good. They're good trades. But as far as buying and holding for a long period of time, maybe outside of Amazon, all of them are pretty much they're gorillas. So you're not gonna get a lot of growth on those. Okay. So I maybe I shouldn't call it anti. I should probably call it like semi-FANG or
Gotcha. So you're looking for the same type growth or similar growth. At this point, you're saying more growth, but just like parallel with FANG without having to pay those FANG prices.
There you go. Right.
Okay, I got you. That's a good move, right there. We got some more comments coming in from YouTube. Christine, how are
Hey,
you, Christine? All right, let me see. What else we got? Can't taste it. How are you? And we got the good brother, Jay Johnson. What's up, Jay?
here.
What up,
What's
Jay?
going
What
on?
up?
Yeah, so man, that's interesting because you said something which is one of the things we're going to talk about. We're going to talk about current events and how that affects the market. So, Antonio, you kind of got us kicked off with saying that your strategy in his current moment is to build up some cash because of what you see happening. But I'll start with you, Corey. Corey, in your opinion, how and why does current events affect the market?
Well, it affects the market in a number of different ways. Like, so when you get news out of the White House, especially about the leader of the country, um, and it's in flux. I figured that the market doesn't like that kind of news. And so because the market ain't nothing but people, and when your country in flux, the market is going to go down. So that's exactly what happened with the market. And so, then the jobs report came out that has an effect on it. The Federal Reserve came out with some numbers this week that had an effect. So it's all kinds of news that has effect on the market. And our government, the situation with racial tension and racial and the racial things going on that has an effect. The president getting sick that has an effect. So everything is has an effect on the market. You just got to know how it affects the market once it gets
Well,
to it. Once it gets
well,
to the
here's my
market.
question to you. Here's my question to you. Not just because I just want you guys to explain this like for our audience watching. And Antonio, you can chime in as well if you want. So we understand that those things do affect the market, but what would you say is why? So why, if news comes out that the president is sick, why does that have an effect on what a company trades for? And either one of you can answer it. I'm just trying to phrase the question in
Yeah.
a way that can help educate the audience.
Well, the key thing about the market is you got to always remember that the market loves certainty. And what I mean by that is that the market loves to know what's going on. It doesn't like surprises. The market cannot stand surprises. And oftentimes that's what news is. For most people, of course, I always say that there's news before the news because somebody actually has to create the news, so to speak. But ultimately, the market cannot stand uncertainty. It needs to know what's going on because the market is what they call a discounting mechanism, meaning that it's always trying to discount the future. It's trying to always see what the future really is, and then I'm going to set a price on what I think the future is today. So, in order for me to do that, I got to be pretty certain on what I think the future is. So when news comes in that's not in the same line of what I may have been thinking, then that's what drives the prices either up or down.
Yeah, that's kind of the point that I was looking for right there too, because you said the key word, which is the future, right? One of the things about the market is institution and big money move the market, right?
Of course.
You could
Mm-hmm.
have your little 100,000, 10,000, $50,000 account, like you don't move the market, right? But
Nah.
there's so much money in the market in terms of hedge funds, in terms of endowments, in terms of just big positions. And when they move one way or another, it has the ability to affect the market. And those big institutions are investing for future quarters. They're not looking at quarters the same way we look at quarters. They're looking for quarters in the future. And they run these days, they run complex algorithms. And I've seen some of the multiple regression models that are run to predict future prices. And you add any sort of data element in there, and it could change everything. So when news breaks, it's really, when you really think about it, it's emotional, because even if you're running the algo and it's created by someone, it's moving on the way that it's set, right? Which is why the
Right.
idea of algorithms are always interesting to me. People say algorithms aren't racist. No, if someone who's actually putting the information in is, the algo is, right? Because you're
Yep.
telling the algo what it needs to predict for. And this is coming from
I'm
someone
a
who writes
pro.
models. I write,
Right.
yeah,
Yeah.
I literally write
No, I
models.
was
I
getting
write
ready to
models,
add
so
to
I
that.
understand. Yeah, so I understand that. But my point is, when you're looking at a multiple regression model and you have different variables, if you start to add variables in, it could change everything. And what these institutions are doing are predicting for the future. So when news breaks and they're looking at something in the future, they're not looking at the next quarter the way that an investor like you or I would. They're looking like, how's this going to affect 18 months from now. So that has an effect on the market. And a lot of times we get punished, which is why even with everything going on and we talk about trading options, why I tell people to be careful, because you're not going to beat the banks. You're not going to beat the institutions, right? Which is why I think that everybody should have their base. Over the long period of time, you can make money, right? Playing it for the long period of time. But time in the market to me is more important than timing the market. And a lot of the reason behind that is because you're going against big institutions that have data that you don't have. So when news breaks, they've already got the news. They knew this news before we did. Let's just put it that way.
Oh,
but
cool.
Antonio, you had something you was getting ready to say?
Oh, no, I was just getting ready to say about when you made the comment about algos can't be racist or algos can't be something. I'm a programmer by trade, and trust me, you can code it however you want.
Exactly.
You can make code racist. You can make it prejudice against certain groups, or you can statistically skew things a certain way. I mean, it's data is easily manipulated.
Yes.
Yeah.
Absolutely.
People say numbers don't lie. The numbers tell the story of whoever made the story. You see what I'm saying? Like, the numbers tell the story of whoever created the algorithm to cache those numbers, right? So,
So like, Coach Carter, Malik checks in and said, "F all that. What I'm gonna do on Monday?" Hey, listen, man. What's gonna happen over the weekend though? Like, is my man gonna walk back out? Is he gonna walk back out? Is he still gonna be with us? Like, we don't know what's going on. Like,
Is the Simpsons gonna be right, or is he gonna walk out of there? He gonna say, "I took my cocktail from Regeneron and I'm good." Like, we don't know what's going on with that, so we can't tell you what's going to go on Monday. You know what I mean? Because we can't tell you what his agenda is or what his health look like. We ain't sitting there, so we don't know. But his health has an effect on the market though, because his health affects a lot of those companies on the market.
Yes, absolutely.
Because just prior to that news breaking of him going to the hospital, the market was starting to price in earlier this afternoon. We were starting to price in the fact that the stimulus bill was probably going to get passed. So the market was kind of, because that's what the market's been trying to deal with for a couple of a week or so, is about this stimulus package. And at one point, the market was pricing in the fact that, well, we just not even going to worry about it no more. And then it started pricing in some optimism that the stimulus package was going to pass. So this little news with him checking into the hospital, this throws a curveball. So as far as what to do Monday is, all I can say is wait for Monday. And if you hold in some positions, hopefully you didn't bet the house on those positions. That's all I can say.
Yeah. And I know that's what Malik's thinking about. I know Malik got some options out there, man. And that's why he said what he said. But another point that you just made, Antonio, which is important, is it kind of has a negative connotation when you say that current events affect the market. That works both ways though, right? Mm-hmm. Positive news can have a tremendous impact on the market. I mean, when you look at earnings, a lot of times that's what earnings are. Earnings are news, right? Either way, whether it's up or down, that has an effect on the market. But to Corey's point, if you understand that current events have an effect on the market and you start to study it, then you'll know how to move accordingly when you see certain actions happen. You know what I'm saying?
Like, to be honest, the biggest news that comes out every year is when the Fed talk. Like, the Fed has an inordinate effect on the market because the Fed controls money. And so, to be honest, you know what I mean? Like, when your boy talk, when Powell get that machine running and he started dumping money into the market loved that. You know what I mean? Like, when Powell was dumping that money into the market and he lowered those interest rates.
I know what you're saying, but I was going to put out there this as a minor correction. The Fed controls currency because that's not real money.
That's true.
Because what they do isn't real money. They control currency because they pumping green paper out there, You know what I'm saying? So,
on all factuals. I'm sorry,
yeah,
I said the wrong word. I conflated two words that are not exactly the same.
but I got
but
you.
money, right? We got you, but money don't exist no more.
Yeah. Money is a misnomer. They control currency.
They control currency, right? The Fed controls currency. And by the way, the Federal Reserve isn't federal, nor does it have any reserves.
At all.
So that right there is interesting. Like, so,
but they move the market in an inordinate way, and so that's one of the things, because they control how the banks lend money, and then how the banks lend money controls everything else around debt and everything else in our society. So it controls the bond market. It controls how much money goes to companies. It controls how much money goes to to your everyday citizens. It constrains or lets the dogs out on the stream of money that goes into society. And so for me, I paid a great amount of attention to what was going on with Jerome Powell says.
Yeah, listen, real quick. We got a question coming from YouTube. Christine, does earnings only affect a single stock and not the entire stock market, right? So it's a question about earnings, right? And there's a lot of ways you can answer that, but I'll let you guys take that. In terms of earnings, does earnings only affect a single stock and not the entire market? Who wants to take that one?
Go ahead, Tonio.
Well, actually, it's both. I mean, depending on the stock, the earnings of that stock can affect the entire market. Because here's the thing, what we call the market now, which most time people are talking about the S&P 500. The S&P 500 at this point in time is very tech heavy. So you're not even going to find that much difference between a SPY ETF and a QQQ as far as how they move, because it's very tech heavy. And by what I'm saying by that is, say for instance, if Amazon comes out with a certain earnings, or Apple or Facebook, any of your heavy gorilla techs, those are going to move the market because they're a large percentage of the S&P 500. So they're heavily weighted in that. So their earnings will affect the market in a positive or a negative way versus a little small company like, say for instance, like a Workhorse or a Blink. Their earnings is not going to move the market. And what people have to understand is when the market moves, all stocks, 3 out of 4 stocks move in the same direction as the market. So if you have a big gorilla like Amazon that moves the S&P 500, then yes, 3 out of 4 of the rest of the stocks are going to move the same way.
Okay, yeah, great answer. And I would just say sometimes certain sectors move at the same time, right?
Yeah.
So that's like, tech can move one way, banking can move one way, certain sectors sometimes move at the same time.
Yeah.
I got a question for you, Antonio, based upon what you just said. Got another person checking in from YouTube. What's going on, good brother? How you?
You.
And that is about what you just said about the S&P being as tech heavy as it is, right? So in the past, I know that a lot of people, including myself, when people would ask about investing, and you know you're talking to someone who's not willing to do research, not willing to do what it takes to own individual companies, you just tell them, look, buy the S&P 500 and stop. Don't even look at it. Just buy the index and go on. But with the S&P 500 being so tech heavy, is that still good advice for one? And for two, what does the future of that index look like? Like, because you're damn near buying it. It's so heavy tech wise, right? So the diversification kind of isn't the same. Are they going to do anything to change that, or will it be So what's the future look like for that?
Man, I don't know, but I just pulled it up online right now, like for the SPY, which is a ETF that basically models the S&P 500. Out of the top 15 holdings, the top 5 are Apple, Microsoft, Amazon, Facebook, and Google.
And it's weighted, right? Am I correct? It's weighted.
And it's weighted. Yeah. So as far as speaking to the future doesn't bode well for a diversified index, because the tech companies are always going to be cash heavy. The ones that make money, they're always going to be cash heavy. Therefore, they're always going to be priced at a premium in the market, because one, they're often cash heavy, they're often low in debt, and they're growth oriented. So they're going to always command a premium in the market, and that premium is going to make their price go up, which is going to make their capitalization, or what they call their market capitalization, go up, which is going to make their weighting go up, which is going to keep them in that top part of the S&P 500. So, I mean, I think the days of buy the index and you're diversified is actually pretty much gone. I mean, it's a wrap. I mean, that's why, even when I do the ETF thing in my groups, I'm basically moving between two different ETFs just to keep a slight diversification. Because if you go with just a S&P 500, you pretty much tech. I mean, you pretty much.
Yeah, that's kind of crazy. That's kind of crazy when you think about it.
Which is why I actually started buying. This is why I started buying the QQQ and the SQQQ. You know what I mean? So because SPY became so tech heavy, instead of me buying the SPY, I went with the actual tech. You know what I mean? Index. So I mean,
it's still a difference, though. It's still a difference because of the number of holdings.
There's a major difference between them. There's major difference between them, but I'm talking about weighting at the top. Like at the top it's tech heavy. So my thing is, if I'm going to have something tech heavy, I want the actual tech. I'm going to go into the actual tech index, right? So, but if I want more diversification, then yes, I would go with the S&P. And I would go with other.
Well, I mean, and that was the point.
ETF.
The point is, it might not even be that much more diversification, but it does give you other things that are weighted within the index, just not as much as tech. But I mean,
you get other stuff in there. Like you get a lot of the next was like some Visa, some MasterCard, Johnson & Johnson, which pulls you into the consumer discretionary side. Which, because even Amazon is not really classified as a tech company, even though it is. But in the sector, it's a consumer discretionary. So you could say that you're getting some of the exposure to that sector. But again, with those top five I just named, that's why you see now in the market that recessions and the coming out of those recessions happen so fast, and going into them happen so fast, because tech companies and consumer discretionary companies are recession sensitive. So if there's a premonition of recession in the economy coming, again, the market is a discounting mechanism. So it's going to already start pricing that in, and you're going to see a fall off in the tech and the consumer discretionary. Mm-hmm. But also what happens is you see the market turn before the economy, because again, it's a discounting mechanism. That's why you saw like all these jobs getting lost a couple of months ago, but the market making all-time highs, because it's looking forward towards the future. It's saying, I got to buy the good economy right now at a discount. I can't wait till the economy gets good to buy it. I got to buy it right now.
Yeah, great point. That's one of the reasons why I like buying consumer defensive company. Well, I don't buy companies. I buy the consumer defensive fund. And the one I have, the top three holdings are like P&G, Pepsi, and Coca-Cola. So therefore, you already know that no matter what's going on, people are going to drink their Pepsi and Coke and buy their P&G products. So we got a couple things coming from YouTube. Christine says, thank you for explaining that in terms of earnings. She understands better now. Appreciate the question. And we have another one about SQQQ, the big one or the small one? Is SQQQ the big one or the small one?
It's the small one. So SQQQ, it is basically saying that the tech companies are going to fail, and then it tracks it at 3 times the rate. So it's a 3 times inverse ETF. So you might see 3 times bear or 3 times inverse. And so basically what it does is it tracks it. It says basically if tech stocks go down, I make money. And so because my actual my portfolio is actually tech heavy, I actually put that I put it in there so that if something happens to my portfolio and they all crash, I still make money on the back end.
I've never used that before. My question to you is this, though, and thank you for the question as well, Kamani. That's a good question, because I have questions on that too, to kind of help me better understand that. Because to me, it sounds like what you're trying to do is hedge. You're trying to hedge because so it's more of a hedge. Now, is it a fund itself, or is it still based on the QQQ? Like, is it something that you buy, or something that only you trade?
No, I bought it. I got 200 shares of it.
So it's shares you buy. So you can buy the SQQQ, and if tech goes down, that goes up.
Yes.
Interesting.
I don't trade it. I mean, I trade it, but for the most part, I don't even trade it. I buy it, and then I run covered calls on it, and then I'll run cash secure puts on it. So if
I've never used that strategy. Antonio, are you familiar with that?
Yeah, I mean, he's basically running an inverse ETF, and there's a lot of different inverses out there where basically, like you said, it's betting on the fact that the market is going to go down. So it's almost like a put for all intents and purposes for the option traders out there, but it's basically in an ETF form where you can actually literally just buy the ETF. You don't have to. It's not going to expire on you or whatever. So like he's doing, you can just you can pretty much hold it in your portfolio as like a insurance policy. It's kind of like buying homeowners insurance.
Yeah. I've never used that strategy. My question is, what kind of expense ratio comes along with buying SQQQ? What kind of expenses do they have? Do you guys know?
I'm not looking at it right now, but I mean,
I just wonder what you know offhand. That's all, because I got it
right here. Yeah, I got it right here. So it's 0.536%.
Okay.
Yeah.
Okay.
So it's negligible. So that's what $5.30 on every 1,000, every 10,000, whatever. So it's
yeah. Listen, I'm a Vanguard guy, so everything is expensive to me. Everything that's not Vanguard is always expensive to me. You gotta understand that. I'm Team Vanguard, so everybody's expensive. But no, I think that's an interesting strategy and that's the beauty of the market, and that's the beauty of like having conversations like this, because I can still learn as well myself, because there's so many different ways that you can make money. So now when we finish this call, I'm gonna get off and start studying like SQQQQ, because you said that there's a lot of inverses. Because
I also have TNA, which is it's a hedge against the small cap companies. So if they go down, so if the whole market goes down, I also get that.
I've heard him mention in courses, because again, I'm a course junkie, so I take different courses. I've heard him mention. I just didn't know one specific one to use, nor have I ever bought one. But now I'm going to be looking at one. Hey, especially if you're still sitting on some. When this news come out by Monday, you might be looking real good. Come Monday.
No, I'm not letting it go. They didn't get called away because I put it. I put the cover calls out far enough where they didn't call them away. I didn't make $1 million off of them, but my whole thing is I'm running them just so like I have that protection, and then my cash secure puts didn't hit either. So I made money going both ways on them, and I'm probably going to keep doing. Huh?
So on that cash secure put, you're basically trying to buy more at a certain point, right?
Yeah. So if they get called away, I always have the cash secure puts going right behind them to grab them when they come back down. Because if the market go up, I'm going to make way more money.
What's the difference price? So what was your strike price with your covered call, and what was your strike price? How close was it?
25 and 23. So basically, I bought them at 20. They were 24.50 when I bought them. I ran the 25 covered call, and then for the cash secure puts, I ran them at 23. So if the market would have shot up and they would have ran back down, I would have grabbed another 100 of them. And if the market shoots up,
I follow along now.
I make a truck ton of money because my portfolio is tech heavy, and I have tech heavy leaps. So if it shoots up, I make a gang of money. But if it goes back down, if the market goes down, if the market goes down, the price shoots up. I lose 100 of them, but the 100 that I keep in my portfolio that I'm not running cover calls on, they go crazy. So you know what I mean? I get a little hedge.
And also let the people know that when you're saying you lose 100 of them, means you're not losing money. It's just those shares are being called away from you at a price, which means you actually made money not only on the call that you sold, but you made money on the increase of the price of the stock as well. You know, so and then if it goes back down, you got the cash secured puts to actually come in and buy them at a discount.
Yep.
I do the same thing, but not like that. I don't do it at the same time.
That's cool.
I run the wheel. So for me, I just run a cover call. If my shares are taken, then I sell puts to try to get them back at a certain price and collect the premium on both sides. And I do it with the same company. So I'm just running a wheel. I've never tried what he's talking about, buying them literally at the same time. Never done that one. You know what I mean?
I've never done that either. That's why I'm sitting there like, that's kind of have to think about that
one. Yeah, that's an interesting strategy. I've never done it at the same time because for me, I'm always doing one thing. Like once I finish with this, if you take my shares, okay, now I want to buy them back.
That's a cash intensive strategy though, because I had to put out, I put out almost 5,000 for the shares, and then I had to put another 2,300 to the side for the. So you had to be cash intensive to be able to do that.
I got you.
It's not like you're gonna make $1,000, $1,500 a week. This strategy, you know, this week I made about $300. You know what I mean? In total. You know what I mean?
That's cool though. Listen, you ain't lift a finger to do it.
You're basically trying to discount your insurance policy, basically.
Yeah. And
you're trying to Geico your insurance on your portfolio.
Yeah, I mean, but
it's a beautiful thing, right? That's just one strategy. But think about this though. Think about this, right? And this is where the math comes into play, right? That one strategy, you said, okay, I made about $300 this week. You do that every week for a month, that's about $1,200. That's the equivalent of getting rent, right? But it costs you $7,000 to get the same thing as someone holding $100,000 asset in terms of rent. That's another way to look at it. You know what I mean?
Man, that's boom. You got, like y'all be saying, that was bars right there.
Yeah. That's a whole different way to look at it. I put up $7,000. I'm getting the same thing as someone who's like, you know, renting the property and also having to deal with a tenant, having to, you know, go fix the toilet, having to do all these things. You let your cash make money for you. So it's about the consistency of that. So I think that's actually that's pretty interesting, man. I'm you know, Corey be out here testing all kinds of stuff, man. Like Corey.
I see, right?
Yeah. Every week he be testing something crazy.
Corey, gunslinger, boy. You're a gunslinger.
He's like a scientist. He be trying new stuff.
I'm looking for a way. I want my money working for me at all times, and so I'm always looking for a way to put my, you know, get them hoes on the stroll. I need my money out there doing what it do.
Antonio, it was one week, and it's this past summer. My man had like 25, 30 different option plays out there at one time.
I did.
Like, what the hell are you doing? He's like, well, I'm testing this and I'm testing that. I'm like, okay, well, let me know how that works out. Because I'm running 1 and 2 at a time. I can't do no more than 2.
I can't do that.
I'm paring it down though. So now all I got is the leaps. I'm running Pinterest and a couple, you know what I mean, a couple other companies.
You're trying to figure out what's your long-term strategy. You're testing stuff. I mean, I get it.
Yeah, for my long-term strategy, you know what I mean? Like, so, you know, because I know how to trade the markets, I can really sit down. I traded Roku by itself for a year and a half. I didn't trade any other company. So I know how to trade one company and make money off of one company. So I know how to do that. Now I'm looking at ways to try to make money and put my, you know, my long-term portfolio in a better position. You know what I mean? Because go ahead, I'm listening.
Real quick, I just want to shout out Malik. Malik, if you still watching, I gotta give you a shout out because earlier in the summer, Malik put me down with something that I've used, like, you know, this is before the summertime actually, and I was using it a lot of this year, and I'm still using it, which is Coca-Cola. And he was, you know, showing me how it fluctuates over the last year between like $40 and $50, and anytime it goes down, buy a 50 call, cash out, and then it'll drop back down, buy a 50 call, cash out. So shout out to Malik, because like Malik was just getting in the game and he recognized the pattern and was like, yo, take a look at this. And it's something that works, which goes back to something we talk about all the time, Antonio, which is trading as a group and bringing different ideas to the table. Because that absolutely worked for me.
Yeah. Fresh eyes, man. Fresh eyes always help, man. It brings you, because like you said, he was kind of new in the game and he noticed the pattern. Because a lot of times, you know, you've been doing it for a while, you start overlooking a lot of things because, you know, you tend to sometimes even go off of instinct because you've just been doing it for a while.
I wasn't even thinking about Coca-Cola. Like, to me, Coca-Cola is in my long-term holdings. Like, and not to keep bringing this up all the time on every show, but it's my first stock I ever bought, like, over 2 decades ago. So it's like I never thought about trading it. He put me down with that. He said, "Oh, take a look at this," and sure enough, he was right. And it hit again this week. It went up to like 49 and some change. So those $50 calls. So now I'm just waiting. So now I go back to our main topic about current events. Based upon how the market reacts to the news that we just got about him being helicoptered off to Walter Reed and what happens with his health over the weekend, I'm going to be paying attention to see if that Coca-Cola, does the Macarena and drops down another way.
Yeah. But see, the thing is, go ahead. I'm sorry, but the thing is, that's why I started buying those 3 times inverse ETFs, because I want to make money in every market without having to think about making money in every market. Like, I don't want to have to trade to make money in every market, which is why I bought the stock. You see what I'm saying? So I want to make money in every market, and with the cover calls, it literally takes me 3 seconds to make the money. You know what I mean? In the market, like I'll push a button, I slide the button, and the money goes into my account. Yeah. So I don't really have to think about those too much. So for 3 seconds of work, that's a 3-second work week. You know what I mean?
Oh, cover calls is a game changer. I get that, but that's one of the reasons why. That's one of the reasons why, like, I position myself in metals, because when I'm watching everything else go crazy, I'm watching the value, the value go up. Man, this is a great conversation. So, Antonio, just getting back into you and sharing your wisdom and everything. What kind of advice would you have for someone who's watching all this news, who's watching everything play out, looking up for this upcoming election, about how to take in this news and, to make great moves as an investor and or trader?
Right. Well, it's good you prefaced it with that, because it depends on what you're trying to do, if you're investing or trading. Like when I said initially earlier that, I was kind of building up cash, that was more so from a trading standpoint, because investing, I'm not taking my portfolio to cash. I'm just not, especially since the run up from March to now anyway. So, it's from an investing standpoint, here's kind of how I invest. And again, this comes down to a personal thing, for the most part. But how I invest in a company, I usually will not buy a company from an investment standpoint unless I look at the company like this. If I had enough money, would I buy the entire company? Would I go Warren Buffett on that company? If after my research I can still say yes to that company, then I'm going to invest in it. And at that point, that means that I'm going to ride out the roller coaster. I'm not. My time frame is wide. It's not this. So the day-to-day up and down really are just wave frequencies in the ocean. It's like somebody, to an investor, the up and down movements is like somebody throwing a rock into the ocean. You might see the ripple, but the greater waves is gonna overshadow that. Now from a trading standpoint, you got to expect volatility pretty much for the rest of the year, because especially through the election. But now with all this, because COVID was already hanging over our heads, the election was hanging over our heads, the protests, even though they've kind of died down from a news standpoint, all of this stuff is just brewing and hanging over the market's head. So volatility is going to be in the market. If you're going to be a trader, I was just telling somebody the other day, is like, basically when you got profits, take them. From a trader standpoint, take them, because holding on to them, like say, really, somebody held on to some stuff today, I bet, and Monday they're going to probably regret that. They probably were up, because the market did bounce off of its lows, but then if you notice towards the end of the day, it started kind of retreating back down, and it started digging like what I call like a little shovel candlestick, where you got a high wick, and then you got most of your body's at the bottom. So it's kind of digging a ditch, so to speak, and we may see that ditch open up on Monday.
Man, that's a great point you made. I just want to go back to something you said, because all that was great. But you said that when you do your analysis of a company, you look to see, if I had the money, would I pay for this entire company? And if it doesn't come back yes to that, you won't even put a smaller amount in it. I think that is amazing advice. That's amazing advice. I never actually, I mean, I always try to keep in mind that these things aren't widgets. Like when you say stock, a lot of times people look at stock as like not ownership of a company. I always keep in mind that this is ownership of a company, but just that mindset of would I buy this entire company? That's you know, that's a different way to look at it, right?
Because what that does for you is that puts you in the wealthy mindset. And what I mean by that is wealthy people think in decades, poor people think in days. And when I say wealthy and poor, I'm not even talking about money. I'm talking about mindset. You see what I'm saying? So because you can have a wealthy minded person who don't have a dollar in their pocket, but they know how to make that currency, so to speak. So when I started investing like that, then that took me out of that trading because you have to have a distinction. And if you do both, and I suggest that people do both, you should trade and invest, but you have to draw a line in the sand. Otherwise, you'll be trading your portfolio, your long-term portfolio, and you'll be trying to time the market, and you'll just miss out. So good companies, for the most part, are going to stay around and be good companies. Are you going to have some blow-ups along the way? Of course. But for the most part, if you do your due diligence and you really say, would I really want to own this company outright? Like, I'm just coming in and I'm going to buy the whole thing. Like, say there's one that pops in my head right now. Like, I got Kimberly Clark. I think I mentioned that the other week about the fact that everybody going to wipe their butt and wipe their hands, paper.
Yeah.
I got Waste Management. Everybody makes trash. Trash ain't never going nowhere. You know what I'm saying? So companies like that, now they're not sexy. They're not going to make me 100%, 1,000% return in a day, but I'm not going to have to worry about them. I can sleep well at night when I own those type of companies. The Johnson and Johnsons, the Coca-Cola. I can sleep well at night knowing that for the most part, the world have to come to an end for those companies just to really go belly up.
Man, that's a lot of great bars in the game right there you just gave out. I hope people are paying attention, man. Shout out to Don. Don says, "Damn, never looked at it like that." Right?
Yeah.
And Christine commented and says, that's a fact. Take the profits and go.
And go.
Kamadi says, I've been in spot put, so he's ready for the shovel. Where's that shovel at? You know what I'm saying? Shovel out, man. That was bars right there. That was bars, right? Yeah. Because that we talk about mindset all the time. And I'm gonna take that approach from now on.
Important part. Yeah, man, if you do that, I'm telling you, you go back through your portfolio, you might be making some changes.
Listen, I learn from you every time we talk, which is why I love having you on, because one of the things I took from you when you were in the podcast that you said, and I did right away, you said that, listen, every once in a while as a trader, you get the itch to try something that's very like aggressive, right? And you said, put that in a whole different brokerage. So now, like, I have a whole separate brokerage for, my high risk stuff that has nothing to do with my long-term stuff. And so I took to heart what you said, and you're right. It does make a difference, right? It makes a complete difference. Because I might try something real like crazy that's like not even a norm for me, but it goes
back to mindset. And see, when you do that, you free your mind. Because if you got that money mixed in with the rest of your money, it mentally, say for instance, if you got $1,000 in your account and you're trading this risky trade and you're trying to trade $200 on that risky trade, and you lose that $200. Well, now your account just went down $200. Now you went from 1,000 to 8. Psychologically, not only is that a 20% loss, but psychologically you like, man, my account is getting smaller. Whereas if you take that same $200 and take it out and put it into a whole nother account, yeah, you got 8 over here in your original account, and you got 2 over here. And even if you lose that whole $200, psychologically it's a mind trick, but it does something completely different. It's just like, oh man, that was my fun money. I have to make up some more money over there and start over again. But you're right.
It hit totally different. It hit totally different.
Listen, man, you changing You got people looking at listen what Don said. Don said he heard that he went and pulled his M1 portfolio up to look at it. He want to make sure that he want to buy these companies forever. You about to have him change his portfolio now, man. But that's an amazing way to look at it, man. For the folks out there still with us, make sure you, if any questions you have, we're gonna be here for maybe like 5 or 10 more minutes. Any questions you have, make sure that you put them in the comment section. We're gonna try to get them answered.
If you have a business, and
you have a black-owned business, make sure you put it in the comment section.
It'll be there forever for everybody to see, man. This is digital real estate, man. It'll be here forever. Put your business in the comments.
Yeah, because these videos live on multiple places forever. So if you have a black-owned business, we want to make sure we highlight it because you never know. Someone could be watching this video 2 months from now and pull it up. But if you have any questions, make sure you answer. Antonio, man, I appreciate you because, both of you guys, man, you too, Corey, because now you gave me this whole inverse ETF. I'm about to make that my weekend study mission to kind of just get further entrenched in that. Like I said, shout out to the Eubanks because I did hear it mentioned through those courses. I've heard it mentioned through several other courses, but I've never dug deep into that to see
I mean, what I started doing is I should just start, like y'all do mathematical models. I just started doing a model on I only did it on my portfolio though. So because I saw my portfolio was so tech heavy, I was like, hell with that. I need to do something that if the market takes a dump, because when the market when tech got beat up last month, my portfolio took a thrashing. I was like, ho, we not doing this again. So I went back and even though my portfolio was up for the year because the market was on a hell of a run, I didn't like that I was losing money and I didn't have anything in my portfolio to gain. Now I was trading, making money, but that wasn't what I wanted to do. I want my portfolio to have that built-in trigger because it was so tech heavy. Because I have Microsoft and Apple, and I had you got Google.
No, I understand exactly what you mean. I understand exactly why you would do that. I have a lot of tech. Because when you buy funds, right, MGK is kind of tech heavy, and that's everybody knows that's my thing.
Exactly.
But the thing is, I also own a lot of VDC, which is consumer defensive to kind of like,
But that's a hedge against the tech heavy. I just chose the hedge a different way.
I was just saying that I like that approach you took because, outside of this conversation, I just don't hear that talked about a lot, right? So to me, it's like now I want to look into that because I want to find people that specialize in that to try to bring that content to our folks because I don't really hear that talked about a lot, right? And I consume a lot of content in this space. So real quick though, we got some more comments. I need a hat. Listen, got you. Shoot us an inbox or something. You can email us bythehoodllc@gmail.com. Don't forget the LLC, bythehoodllc@gmail.com. We can get you one of these hats, or you can inbox us on Facebook or IG. We'll respond right away. Malik has a point. He said, we talking real light. Trump might legit croak over the weekend. He's in Walter Reed because it's serious. I mean, listen, I don't know how serious it is. I'm not going to get into my conspiracy theories because y'all going to think I'm nuts out here. But, I mean, I don't know what's going on, man. But, so we'll see what happens. But here's what I'll say about that, though, Malik, to that point. And this is just from someone who reads a lot of history. It's crazy to think that, but if that did happen, we'll recover. We've had presidents that got holes right in their head.
Presidents get out of here.
The market dropped, and I mean, eventually it popped back. So if something like that did happen, and again, as much as y'all could dislike the guy or whatever, I don't wish death on anyone. I just don't. That's
right.
That's against my code. That's against my energy code.
Yeah, I don't believe that at all.
Anyone that don't wish death on me.
And someone told me, they was like, the thing is, y'all don't realize who Pence really is. Because if y'all realize who Pence really is, y'all be saying good well wishes to this young man. But anyway, with that being said, though, I mean, it's
the market will recover, even if literally we got the news tonight that that whatever happens or whatever. Will the market on Monday be cratered? Of course, it would look almost like Corona. But I mean, you think about it. Look at what happened after Corona. One thing about the market, it stabilizes itself after a while.
But you know, interesting thing about that point, and thanks for that comment though, Malik, because it gives us a chance to talk about a couple things. When you study history and you look at like a president assassination, or even when they tried to assassinate Reagan, like what happens to the markets, right? It's interesting because markets will take a dip, and it's like a transfer of wealth happens right before our eyes. Because when the market takes a dip, it's a lot of the retail investors and people getting scared, pulling out, and the big boys come in as they always do and buy things for cheap. So then when everything recovers, guess what? It's a whole other transfer of wealth going from the common man to the folks that got it anyway.
Because again, it's going back to what the topic was about the news. Because if you think about it, if a president dies or is assassinated or whatever happens bad, right? Will that news event cause a market reaction? Of course, the market will crater, it'll dump, right? But what happens is the market again is a discounting mechanism. And it's always buy the rumor, sell the news. So what happens is the rumor of those that's happening is being bought, and then next thing you know, it happens, boom, the sale happens, but then the market starts to say, well, do we have a succession plan? Yeah, we got a succession plan. It's called a vice president. It's called the Speaker of the House. It's called, so meaning the fact that things will eventually turn around. Right? So then it starts to price in the recovery. And so while everybody's getting afraid and selling, because it was the same thing in COVID. And I told people back in COVID, just from watching the charts, and I said, look, the market is about to capitulate, meaning that all this volume and everything is going to hit hard and people are going to sell off everything. And as soon as I had a couple of my friends who really don't even trade, they was calling me up, should I sell my 401k? I said, okay, it's time for me to buy now. Because now the average retail investor is scared out of their pants, and now that's when the money is getting ready to be made.
Yep, great point. And it's always a transfer of wealth, so that's what's interesting, man. Don says that got to show love to BOBs and Black content creators. Absolutely, Don. We appreciate all the support. We got. Let me see. You got a couple things to go pull up here. Black Free Thinker, what's going on? It says, thank you for the book references from a couple weeks ago, Antonio, when you were on.
No problem.
They managed to get all three of them. That's dope. That's dope. Don says, next man up. That's how it is.
That's what they say in basketball, right?
And you kind of answered this one, like, you think it would drop like it did? Yeah. Malik says, but my options.
Malik, I'm sorry.
Listen, I ain't gonna lie, my options gonna take a beating too, because I have leaps. So my options gonna take an ass whipping if that happens.
This is the weird thing. Because I know Malik's probably sitting on options where he already made probably like 80%, and he's probably being greedy. Because that's Malik. But hold on, I'm going to load.
It depends also on what his expiration date is. Now, if you're sitting there holding on to some weekly, that theta finna kick him in the butt.
Oh yeah. I'm going to load the book. That's the move you make, Christine. Christine, when it happens, that's why it's always a transfer of wealth. But we need to be on the other side of that transfer of wealth. We need to understand that this happens over and over and over again. I remember like 9/11 when it happened and the market closed. I think it was like a week. They closed for a minute and everything dropped. And I remember people were like, I'm getting out. The world is over, yada, yada, yada. And, I'm sitting there
6 weeks later.
Yeah.
6 weeks later.
Ever since the market has been in existence, this is the trend of the market. Oh, yeah. Literally. Ever since it's been in existence, because it's a current, it's going to always survive because these people want to make money. They got to move money. Money is their god, so they have to keep the machine going.
Eugenia, how are you? Thank you for tuning in. Make sure you hit that like button. Real quick though, to that point, that's a great point too, and I just want to expound upon that real quick because a lot of times we think about our personal accounts, but we don't take into account what's actually in the market. When you talk about these big institutions of higher learning and they have endowments, where is that money at?
Yeah.
That money is in the market. When you talk about these big pension plans from the different fire departments, police departments across the country, that money is in the market.
It's in the market.
And so Yeah. So the thing is, though, there is so much at stake, which is why the market is always news on a daily basis because there's so much at stake here. It's not about just these little trades and your little personal account. It's the way of the world. So therefore, that will be protected at all costs. If you didn't learn anything through COVID, you should learn that they're going to do whatever it takes to protect it at all costs. Like,
At all costs.
The way I look at the market is if the market completely goes like this out of here going, I'm thinking that we in a Walking Dead scenario and we got bigger problems than worried about the stock market if it ever gets to that point.
Right.
So
That's what I always say. I always say that. I'm like, at that point, it's canned goods and ammo.
Factual. Malik said that his are January 2023s. He's sitting on.
Oh man, you good. Because man, Malik, that was a trade just this week where somebody they thinking it's SoftBank again that bought $200 million worth of call options on the FANG stocks, Facebook, Apple, Netflix. $200 million. Now they were for I think they were like March of 2021. But now here's the thing: they sold stock against that, so they moved out of their position, claiming those profits, and then used those profits to flip into $200 million worth of calls for March. So they're looking at the fact that we may have some momentary downturns right now, but the rebound is going to be in the spring.
Yo, SoftBank, every time I read news about SoftBank, it always seems fishy, man. I feel like they scammers, man. I feel like, I feel like SoftBank, no disrespect if you work for SoftBank and you're watching this, man, but y'all news always is kind of like, it's always some like half shady stuff going on with SoftBank, man. Like
Samuel Jackson works for SoftBank.
Yeah, man. SoftBank, they remind me of some couple cats I know from Brooklyn, man. It's the same type stories, but that's either here nor there, man. Don says that's why that's why our community needs to be involved. Don, you are absolutely correct. That's why we need to be involved. That's why we need to have the knowledge and information to understand that this is a long game. That what's at stake here, how it moves, why it moves, which is why we focus on that a lot, right? We can get into the specifics about how to trade. That's why we talk a little bit about that, like some of the things that we personally do. We always talk from experience. So you're not going to hear me in here talking about like these complex bond trading things because I don't trade bonds, but you know what I mean? Like I can't even tell you about SQQ, but I can learn from my brother Corey because he's doing it. We talk about things that we do. But we talk a lot about mindset because to Antonio's point, that's what's most important. And for our community to start getting involved and to understand why it's important to invest. So a lot of times when we actually get asked to speak, we don't go over specific strategies. We always talk about mindset and why we need to invest because what we found is most people that we talk to don't understand why, right? They know they want to because it's like a cool thing to do. We live in an era now where it's like, the screenshot era where everybody's showing screenshots of what they made. But to kind of pull that back and to explain why it's important to be active in this market, because there's always these transfers of wealth and we're already operating from behind, to be honest. But
there's a transfer of wealth every bad time. I mean, we go back in time. You had COVID just now, right, in March. You go back to 2008, the bubble busted in the housing market. You go back to the .com era. You go back to the World War, to Vietnam. I mean, the assassination. I mean, the market always provides these opportunities to transfer of wealth, but we're usually afraid to get into the flow. And again, that goes to mindset, and you have to do like what Warren Buffett is famous for saying. You buy when there's blood in the street. When fear is at its all-time high, that's when you get in.
But I think that comes with it's a lot that comes with that, right? Because and I know and I know we can dig deep, and I don't want to go too deep. I just want to laugh at this comment. Somebody said, "I know that Derek Grace is selling hella post-Trump packs today." I get that joke for those that don't get it, because my man sells a course called Post-Trump, so he might be, man. Malik, you crazy, but it's a lot that goes to that, Antonio. And I'll just put it like this, right? Because we're operating from behind, we don't have the advantage of other cultures of taking risk. So because we don't have because if I'm Winthrop the Fourth and I lose all my money, I can fall back on Winthrop the third, who's
Right.
spending Winthrop the first's money because they've been stacking money since 1700s, right? So we don't have that mindset, but this is why it's imperative. To Corey's point, Corey always talks about this when we speak at places, which is to think past your lifespan. Because now we're playing catch up, but we have to put ourselves in position to have the knowledge. And even if we don't achieve what we think we want to achieve, we can set up the next generation to have something to kind of fall back on to take those risks. So
Right.
a lot of times we don't take the risk, right? And it's unfortunate we don't. But when you get into the psychology, I also understand why we don't. Because I had a guy tell me before, and he was losing. He lost like his thing went from like 280 to like 8 grand, something crazy, right? And it was after '08, and he sold out of everything. He was like, man, it's easy to say don't sell when stuff is falling, but when you're losing $100,000 in one day, like that's different actually going through it than to talk about it in a course or a book or in the future why you should have did this. You know what I mean?
Right. It is.
And I
Yeah.
understand.
Everybody's a good quarterback on Monday, right?
Yeah, so I kind of understand that when things are in a free fall. But again, when you look at this from a historical perspective and you stop looking at small chunks, what I find interesting, and which is why it's the greatest time to be alive, specifically for the generation after us, because historically speaking, these opportunities didn't come as much as they seem to be coming now, right? You had World War I, World War II, you know, you had these different things, but the way they're coming now with like COVID and then with the news, like with Trump and with '08, even like 9/11, the .com, like in my lifetime, there's been several of these moments. They seem to be coming
Yeah.
more and more frequent. I don't know if that's a good thing or a bad thing, but it can be a good thing if we put ourselves in position to take advantage of it.
Right. And it speaks again back to mindset, man, because you keyed in on something about that us taking risk or whatever. But see, my thing is it goes down to mindset, and true enough, the psychology behind it is that we aren't taught. But here's the thing: that we take risk by not being in the game,
Fact,
and then
fact.
on the flip side of it, we take risk also. Here's the thing: you said people don't like to lose money. Well, here's the thing: people always used to tell me I don't have money to invest, but yet they're talking to me on $1,000 iPhone, right? And so
Yeah,
I'm like, here's the thing: you're taking a risk and losing money when you buy that $1,000 iPhone, because the moment you buy that $1,000 iPhone, 6 months later, it's no longer worth $1,000. You lost money.
yeah.
So you're taking risk every day. It's just that you're not aware of them because they're so much ingrained as a part of our everyday life. So it's just a matter of shifting your mindset to say that, man, I don't really have to get this new iPhone. I can just use the same beat up one I got now, and I can put that $1,000 into the market,
Listen,
and go from there.
true story, right? I had a cousin, and I'm not gonna put your name out there, and I'm not gonna at you, although I should. But he told me he was like, "Man, I ain't got no money to invest." He said, "And even if I did, I wouldn't know what to buy." Right? He was talking to me. He had a Gucci outfit on from head to toe with a pair of Nikes and and he had a brand new iPhone in his hand. I was like, "You wearing everything?" I said, "You look what you wearing." I said, but it was a learning
God.
experience for him too, though, because he had no idea that some of the things that you wear are on the market, or some of those
Right.
trinkets. But, you know what I'm
Yeah,
saying? So
it's definitely a learning curve.
yeah, Don says I need my great great grandkids to eat off these J&J dividends.
There you
That's
go.
right.
No
Let's
doubt.
have it. Let's have it. Listen, Christine, we appreciate your support. She says, great talk tonight. Salute, brothers. Let's close this wealth gap. That's the job we got to do. There's still a lot of work to be done. Thank you for your support. And it is time for us to get out of here. We've been here for a little over an hour. And before we do, Antonio, I just want to thank you again for sharing your wisdom. You gave
Thanks,
us
man.
a lot of jewels again, a lot of
Much
things to think
love,
about.
man.
And now you got me want to look at my portfolio. Do I want to? Would I buy this whole company? That's the new question. Would I buy this whole company? So, just
Yeah,
appreciate you,
because
bro.
with that, right? Because with that question, man, it helps you to get through these drops that do happen. Because you're like, no, I believe in this company.
Yeah,
I believe in and you're really betting on the jockey and not the horse. Meaning that you're betting on what this company is about, what they do, and the viability in the market. And so you're able to sleep through those drops. Now you always should have a stop gap. Don't get me wrong. There should always be a point where like I gotta cut my losses. But for the most part, you sock it away and you keep it moving.
Yeah, I appreciate that perspective. Is well needed and it's needed for our community. And somebody say thank you for your time, thank you for your
No
perspective.
problem, man. No problem.
You know what I'm saying? And the folks out there thanking you as well. Because it was a great episode, great talk tonight, gentlemen. And Corey, man, thank you as always, good brother, man. SQQQ, I got some homework to do, but to our folks out there, please make sure you share this episode. Make sure you tell all your friends and family about what we got going here because we want to help educate the community. Make sure you hit those like buttons. And also tune into our podcast this upcoming Wednesday. This upcoming Wednesday, we have a couple brothers on who they have their own platform, which is dedicated to talking about finance books with the community. They specify in finance books. And their objective and their goal is to get every kid in elementary school across the country to read one finance book before they even enter high school.
Wow.
Yeah, so it's a great episode. It's a funny episode, and we want to support their platform and what they got going on in terms of bringing finance books to the community. So that's this Wednesday. The episode that just dropped is actually out right now. It's on all podcast platforms as well as YouTube and Facebook. Was with a couple. It's a couple that paid off $224,000 of debt in 2.5 years, and they tell their story about how they did it, why they did it, and the importance of not paying other people interest and making the money for yourself. So that's a powerful episode that's out now. Another powerful episode coming up this Wednesday. Just stay in tune with us. Please make sure you share everything we got going on to our students at Body Hill University. Yeah, our students at Body Hill University. Special shout out to y'all, for keeping us busy and also just learning with us. This Sunday, we'll be on the Black Wealth Project. That is a group effort between us at By the Hood, as well as Malik, who was in the chat today, real estate coach Carter, the finance rebel Kamari, real estate Tracy's one of the top brokers in the country, as well as Courtney, the Ivy investor. So we come together every Sunday just to have conversations pertaining to Black wealth and the Black community. That's Sunday at 7. It'll be live on Facebook as well as YouTube. But just stay in tune with us, man. We're all about community first. And we want to make sure that we share this with as many people as possible and try to help as many folks as possible. Thanks to Antonio again, man. And look, we'll be back here next Friday to talk about whatever's going on in the world of finance and Black wealth. But, just want to say thank you to everybody. We definitely appreciate y'all. Peace.
Peace.
Peace, man. Thank you, man.